today. The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go through the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
Well, I think we have the makings of a big bear trap going into Memorial Day weekend. And got everybody short. I went long a couple of stocks today. One's got about 33% short interest in it. The other one's 50%. I'm swinging for the fences on that one. It's way under the radar, but 50% short interest. Really couldn't go down. Had no volume this morning. So I kind of like it. A lot of times what will happen is after expiration tomorrow, which I suspect we've got maybe 50 points higher between now and the close tomorrow. I think what we're going to start seeing all next week, in fact, today's probably the last big day of volume in the entire markets, probably, unless we have some kind of big news event. But I can say that we're probably going to start losing half a billion shares a day until we find some kind of run rate somewhere around the 27th or 28th of May. So volume's going to decrease. That means that these stocks with incredibly high short interest are easy targets for stock operators. If you haven't read the book of Reminiscence of a Stock Operator by Jesse Livermore, I highly recommend it. But why the indexes may not run straight up, what does tend to happen is a game of whack-a-mole. And that is everybody will be short this stock. They're sure it's going to go down. Super high short interest rates, very narrow exits because there isn't much volume. And out comes the press release. And that press release basically says this company can turn lead into gold. And it's not real. It's not true. But it doesn't matter. You get taken to the woodshed if you're short on those. Now, not all of them do that, but you can generally, when you get 30, 40, 50% short interest in a stock, and that stock, one, is not going out of business because it needs money, and two, it's got a decent product. It's not just a horrible company. It's just, it's like catnip to these folks that are stock operators. I always wondered whether or not there was some kind of implicit or other collusion, but it happens so much that when these times of year come around, when you have a highly decreasing volume, I love to try to get into these positions because I'd say 50% of the time they make money. They generally don't lose money because with all that short interest, there's always people at least covering some as the markets go quiet. But to get behind a real stock operator when you can see a 20% run in a stock in a handful of days, and then it gives it all back up, is not uncommon. But like I said, I suspect we got maybe 50 more points tomorrow, but they're probably going to be on light volume. But again, the rest of the summer is probably going to be on light volume, except if a meteor hits or some other big news event happens, it's probably going to be lighter volume. Now, on the good side, which is we focus on those positive waves, Florida will be totally open for business the day after Memorial Day. Other states are like that. Some states like, Pennsylvania? The governors may be tarred and feathered and run out of the state if they decide to hold up the massing hordes. Yes, big sale on pitchforks at Home Depot and Lowe's. Get them while they're hot and while you got them. But yes, the unwashed masses getting rather tired of the depressive, we're just going to lose weasel World Health Organization guy saying it's going to be 5 years before we can open. And we're Americans. We don't listen to that kind of stuff. We adapt, we overcome. And we will adapt and overcome. But my guess is that even in discussions where a lot of people in California have basically said enough is enough, they're talking about opening up the restaurants either today or tomorrow. And these are the people saying that everybody was going to die. So what is the truth? If they really believe everybody's going to die, they're really going to open up the restaurants? Did they never really believe it? Did they just have to give up on that belief because it wouldn't look good if their state burned down while everybody else did good? But I'm not one to believe much. I almost always think somebody has an ulterior motive, whether it's a press article. You have to kind of dig through it, maybe read from both sides of the aisle. If it's political, to see whether or not somebody actually is telling the truth. I mean, just in the last week, we know exactly that people can go under and say one thing under oath and literally 5 minutes later be in front of a TV lying their skunky, weaselly-like selves as much as they can. So what do we know about this? Well, I tend to take the opposite side of the market. One gentleman in the den calls me a counterculture trader. But I certainly think that almost always there's one big lie after another, whether it's political, economic. There's always a lot of reasons. So when I see a lot of people, especially big men of the street, telling everybody the end is nigh, my initial reaction is, okay, I'm going to put out a big basket because I think it's going to start raining gold here in a day or two as soon as these guys get whatever they want. Because I'm not a big fan of believing that these guys are really thinking about me before they lay their head down on the pillow. I'm thinking about how they think that they're talking about their own book. And how many times did we see, what was the guy's name that got in hot water about 4 weeks ago telling everybody the end was over? Yet he was out busy buying all kinds of stocks. I want to say it was Einhorn. Is that the guy it was? I think it was Einhorn. And, of course, Drunken Mueller yesterday or the day before. It's an endless procession of weasels and skunks. I believe none of them until there is at least 3 or 4 confirming articles and nobody actually says it's just a pack of lies. But generally things get better. America, strong country, it will adapt. It will overcome. I don't believe the naysayers. The end of the world is not coming. Oh, they called for it today. Guess what? It's been postponed one more time.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
We're going to get to history in just a minute, but everybody was talking about lemmings and all that stuff. And of course, the idea is that lemmings follow one after another, each off a cliff. Actually, I was helping Electronic Arts sell a game called Lemmings. So I thought it very interesting, but the part where literally everything is a lie, even lemmings is a lie. They don't follow each off the cliff. That started with a BBC television show where someone thought that lemmings followed each other off of a cliff. They couldn't get it done, so the producer, this is kind of like the Pintos hitting each other and bursting instantly into flames because NBC put explosives in it. Remember that deal? The Pintos would just touch each other, instantly explode because NBC had put explosives in the car. Everybody, especially the press, lies about literally everything. Lemmings is that too. They don't follow each other off a cliff. Someone thought that was true. It was old wives' tale. A BBC producer just took a bunch of lemmings and literally pushed them off a cliff, took video of it, and I don't know, it was film back then. I think this was like in the 70s. And for years, nothing happened until one of the people that worked on it ratted the guy out to like PETA or something for throwing all these lemmings off the top of this cliff. But literally, just be very, not cynical, but skeptical about literally everything you see. If you don't read the original thing, then that's it. In fact, I was going through with a guy that will remain nameless, but he was doing an accident investigation. He heard my piece on NVIDIA's ability to real-time clean up audio, and he's doing this accident investigation and wanted to go back and reprocess the audio. Didn't have the equipment. He asked if he could just send it to me, and I would do it, and I did help him out, find out why things happen. But the interesting part to me about all of this is just how many times people get stuff wrong. And like I said, I tend to try to push a book called Reasonably Optimistic about generally how the end of the world really doesn't happen. Horrible things happen, but then generally within a few years things get back to normal, sometimes even faster. And of course, being rationally optimistic. I love the book Super Forecasting, where the guy literally spent 20 years of his life going through and finding people that made big predictions on politics, on economics. He found out that they were, by and large, 80% wrong. You probably would make a lot of money just going on the opposite side. So when Powell tells me he needs more money, I just figure that he's wrong. When Powell tells me that he needs to raise rates, I'm just assuming, like whatever it was a year and a half ago, that he was wrong. The old saying in the stock market is economists are there to make astrologers look good. My life as a naysayer. Would that be a good book? I say nay. Anyway, let's do a little history.
Then it's all just a little bit of history repeating.
What else is there? Don't be cynical. Be skeptical. There is a difference. On this day in 1973, the United States launches Skylab 1, its first manned space station, which probably is not true. It is the last launch of the Saturn V rocket and the largest payload ever launched into space at the time. Skylab will fall back to Earth's atmosphere in July of 1979, 5 years earlier than they predicted. What would be the chance that anybody making a prediction was wrong? Well, they were wrong by 5 or 6 years. But I think one of the bigger things, I remember the party we had in 1979, that was the Skylab falling party. I think it was over a weekend, if I remember right. Kind of just vaguely remember because there was lots of alcohol involved, but we had a good time just the same. But there was a program that started in about 1962 called MOL, M-O-L. And they had designed Skylab-like things to go up into orbit. There are a few astronauts that apparently died, but no one really talks about it or says much about it. This has all been kind of swept under the rug. But a lot of people do believe, and people in NASA too, say that there were several of these Skylab kind of things that went around far before we went to the moon, and because they were used to photograph Russian land. They were giant telescopes pointed at the Earth is basically what these things were, with a couple of guys in it to change the film and send it back occasionally to Earth. They'd stay up there 30 days at a time. But again, all cloak and dagger stuff, so you don't know, was it real, was it Memorex? But there seems to be some people that died. And the question is, where did they die? They didn't ever got their bodies back. And the question is just how many of those people were astronauts and got their astronaut wings in private. We'll never be able to talk about it. On this day in 1973, Skylab goes up and the last Saturn V rocket launches. What else do we have going on here? We'll start looking at some charts today. First in line is going to be Cisco, who reported last night. I don't tend to watch much television. I do tend to reach the transcripts. And man, whereas everybody trying to tear Cisco a new one last night about the end of the world on it. As I said yesterday, I wasn't looking for much to the upside, about $45. You hit 44.58. You got kind of a little hammer out here. But I think that they kind of went deep yesterday in this thing, trying to tell everybody how horrible the earnings would be. It wasn't great. It certainly wasn't bad. especially given the conditions. But my guess is this will probably continue to do well. I'm not going to be in this thing, but, over weeks or a month, could you get back up to 48? I think you could. There's a lot of that going on. And politicians shouldn't pretend to be biologists. Doctors are, Well, the problem is that doctors are incredibly wrong. Biologists are incredibly wrong. The idea of getting an expert, the problem is experts are generally wrong. And that is the big problem. Like I said, 20-year study of experts. They were mostly wrong. They were horrible at short-term predictions. They were horrible at long-term predictions. We'll be back in a minute.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, it was Super Forecasting, a great book where a guy spends 20 years of his life trying to find people that are actually good at forecasting. And very interesting to find out that the best forecaster he found was some retired old dude in Nebraska. This guy, thousands of miles away from Washington, D.C., smoked the competition on predicting just about everything. And he went and spent another 5 years looking at what made people good forecasters. Excellent book if you get a chance but Super Forecasting is the name of the book. Not a whole lot in there other than the fact that you should, at the very beginning, end of it, understand about 5 basic principles of why people make bad decisions and bad forecasts. But there are people that can do it right. It's just generally forecasting something good probably doesn't get you the $500 a day check that you get from going on CNN and saying the end of the world is tomorrow. And you know what? You can do that over and over again, and the world doesn't end, and they still pay you the $500. What a scam! What a great deal! Yeah, most of these guys make $3-5 grand a month off of these things on going on Fox or CNN or. Does anybody even watch MSNBC? I don't think very many people do. But you look at those two, and people all go on there every day. They're incredibly wrong. Sometimes they're just lying. Sometimes they're just inept. But you always have to ask the question, stupid or liar? Well, this guy, is he just stupid or is he just lying? Because it doesn't make any sense whatsoever. What these guys are spouting. Anyway, we will move on. I do think that book has made a great deal of good change in my trading, mostly on learning to pay attention or not pay attention to so-called experts. And I'm not a so-called expert. I'm a practitioner who could be wrong this minute. What I put it in the den occasionally, which is overconfidence starts at thinking you're more than 51% right. You can always be wrong. Okay, applied materials. So we're looking at some of the SMHs. I think I've got some more emails here too. If I can find them, we will look for them. Look here. Don't know why I want to look here. I do my own McClellan's oscillator link. Pete. Rolled over with negative reading, possible tremendous bear market rally. You still agree with the indicator? I do, but generally the summation index will dip. The question is, what happens with the summation index? The problem is that it doesn't roll over instantly. If you see it move in it, that's generally not the end and be all. Generally, the summation index will dip, and the markets will continue higher. What you're looking for is divergence. That is, that the market continues going up and the summation index starts going down, not just that the summation index goes down. The big moves in markets are when very few stocks move the indexes much higher, but the bulk of the stocks are being sold. So what you want to see is it to go wide for a while. And if you look at that summation index, you're going to see if I can actually bring one up here. We'll bring the one that I use, because I wrote my own. It's a little bit different than everybody else's. Here's where I'm talking about where you want to be careful. I was not long into the big pull down in the market, but one of the reasons why I wasn't long was this section where the market kind of held up and the summation index continued to move down all the way into the end of February before the market really broke. That's what you're looking for, not that how can I say it? Not that it just ticked down and the market ticked down with it. Those can be reversed fairly quickly or in kind of an uptrend, may even be kind of a round top. But yes, you want to be careful anytime the summation index is moving lower. But when both the market and the summation index move together, generally you've already had the period where you saw the distribution in the market. And in this case, it started pretty much the end of January and continued on all the way until the market broke. So it doesn't happen in a day. The summation index is a long-term, longer term, or let's call it a medium term signal, not a real long term. But you also don't want to, every time this thing moves down a little bit, freak out. You want to see divergence in it. You want to see the market either continue to go down, but the summation index starts moving higher. That's telling you the bottom is in. At the top here, that's it. But you want to kind of draw a trend line and a little bit of a tick down. How many tick downs have you had? You had a tick down at the bottom. You would have probably been out of the market all the way when it went all the way back up a bit, at least in the New York Stock Exchange. Of course, you got the NASDAQ saying the same kind of thing. It looks just about the same. But at the same point, saw the NASDAQ make all those new highs toward the last week of February. I didn't get the hint to go short, but I certainly wasn't losing money being long there. I knew it was that you had the gap down. I was hoping for it to push back up so I could pull the trigger and get short. We never got it. Sometimes the market just leaves without you. But that's it. Summation indexes are good, but there's a lot more to them than just saying, hey, it's headed down, so the market's headed down. You want to see a divergence between those for a week or two, both at the high and the low. That's why I keep on saying and pushing off any kind of huge end-of-the-world predictions for the summer until maybe Memorial Day. Generally, it takes a while for these things to set up. They don't just happen. 9/11 does come along every once in a while, but guess what? It is much more of the pattern that we see something like 2008, where May 5th comes along and every single stock in the financial and the broker-dealers tests a previous high a few months earlier with 50% of the volume. You generally get a chance to see that the market's ready to pull the ripcord. It's only things that the market's not aware of, like something like a 9/11, and where you get the big moves by themselves. So it's not great in the summation index, but as I said, I'm not long any indexes. I'm long sectors and individual stocks. Those stocks are massively shorted, and I'm waiting for the whack-a-mole. When these things pop up, I'll sell into it. We'll be back in a minute.
Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we were talking about SMHs. We're kind of at this trend line, and we're looking at the volume a little earlier. We had some decent volume at the beginning of the day, but it burnt out fairly quickly. We're still kind of in an uptrend that we haven't really truly broken in applied materials. Let's go take a look at the SMHs real quick. Kind of the same thing. You kind of pierced what's that, but my guess is that even if the market's headed lower and the SMHs, we're probably going to be in a trading range between 130 and 140 through next week. And after Memorial Day, you're going to get a much better vision of what's going to happen over the summer. I think a lot of this, and one of the things I would like to see in the SMHs, if you are feeling bearish, is this double gap, because these things come back to these things quite a lot. But I could see, 144 in the SMHs, get up there on nothing next Friday. I would much rather be short at that level and then maybe plan on it going back to 125. There's a lot more meat on the bone for that trade than trying to short here and find out you got pretty good support just $3 lower at 125. Doesn't mean that I'm right on the direction, but I'm probably not wrong on the risk reward. And again, I'm trying to hit at least a 20% winner, maybe 25 or 30% on any stock that I want to buy. If I get less than that, then generally the problem is you just end up trading a lot, not making a lot of money, and wearing yourself out. You're in another position when the right one comes along, the one that really can make some big money, some life-changing money comes along. So just some thoughts on that. Other questions about Apple. Options are still fairly bullish in Apple, although you did hit a previous high. My guess is that they'll try to bounce that tomorrow to 315 or maybe 320. Didn't have a lot of volume so far. You had 50 million shares yesterday. You only have 27 million shares, a little lower. But I still see nothing in this that says that you would want to pull the trigger on it. And a lot would say that if you went up on light volume next week, you could really see something that maybe would be a signal by the end of next week on Friday. Maybe, is that the right dates? All right, yeah. No, you actually have 2 weeks. So, yeah, I mean, you got expirations tomorrow. You got really maybe a couple of weeks. But 25th, of course, Memorial Day. 26th, you kind of come back and really kind of the start of the summer. But again, I don't see a lot of downside. We may pull back again, but I think you'd see a much more predictable pullback if you waited for like the 26th when we come back and see how this market works out. My guess is that we've got a lot of people that are going to get back to work. They're going to be back burning gasoline. They're going to be buying stuff. They're going to be doing stuff. And the economy is going to get kind of kick-started again. It probably won't be near as bad as everybody that wants to predict nothing but doom and gloom will bring up. Market right now, and we're off 4 points on the S&P. Cash, Dow's up 71, Nasdaq's off 45. But like I said, I mean, there's been a ton of shorting out here. 80% of the time, we're going to close over 2870 tomorrow. So that gives you about a 50-point move. Is that 100% of the time? The answer is no. 80% of the time, we close higher than the Wednesday, the week before options expiration. And that would give you 2870. That we've kind of stopped here makes me think we may start the short squeeze into next Friday, starting now, or now-ish. We'll take a look at that. Okay. Again, don't expect for massive moves in stocks through next week. I continue to think that you want to find stocks that have massive short interest in them. Those are going to be the ones, as volume decreases, that will have the biggest gains of next week. If you're looking for stocks that probably are going to have the biggest drop come after Memorial Day, if the market does move lower, you want to find stocks where all the shorts have covered. Then when the stock starts moving down, you don't have a lot of natural buyers. So a lot of times people worry about the direction. They don't worry that much about the amplitude of the actual thing. But I've got a stock that I bought. It's up, I don't know, about $1 higher than where I bought it this morning. Is it that going to make me rich? No. But, could see 20%. Maybe more in it through next week, just because it's 35, 36% short interest in a stock that doesn't need money, and it's got the sales continue to be good. You know that because the earnings have already been announced. They may be a little bit fuzzy on the future, but I think that just gave me a good entry for a good price. But we shall see. I'll stop out if I get the wrong direction, and I won't get too much dogma in being a bull or a bear. Okay, what else do we have out here? Question about Workday, WDAY. I was looking at this, I think, earlier. Again, you came right up to this double gap. It goes back to the 5th of May. You had about 2 million shares. You tested it with 2.35 million shares. You got a doji today. So we're going to assume tomorrow, if the market starts moving up, that doji is probably signaling, and since it's on light volume today, it's probably signaling that you could get this thing to get back up next week to 168.75. Now, if it did that on very light volume, which we're probably going to get next week, it would be a much more compelling short up there, retesting the 168.75 or close to it. I want to say like 1.5 million shares. To me, that is a much better setup than trying to get a few bucks out of this thing. Now you got more than a few bucks, but again, if you're talking about going after a stock, not this particular one, but any of them, going back to retest the lows, you need really light volume. 75% of the time, stocks are pretty much going up higher. Doesn't mean they're going up much higher, but they're going up higher. You want to find it when literally there are no more buyers at the highs. And I don't think you have that yet. You have fairly decent volume, both on the 12th and the 11th of this month and Workday. I do like the stock. I think there are 100 stocks out there that are better to short other than that. But questions about what I'm looking for in a spike. I think you already saw it in some of these. Again, Datadog came off earnings, big, huge move. That's the spike. You're getting a little bit of a retrace. What you would expect this to do is go slightly lower, maybe go back and test 72.15. If it did it on light volume, then maybe you've got something. But actually a very bullish signal on Datadog on the 12th. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as our #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Question, WFC, which is Wells Fargo, is it today's dead cat bounce? Well, certainly you had exhaustion volume yesterday. I wouldn't call this a dead cat bounce in the fact that it hadn't bounced that much. But generally, when you get just the highest volume day that you've seen for months and months and months, like you had yesterday, that's generally a sign of exhaustion. I'm not going to be long financials in this for a while. Let me put it that way. They're going to have a lot of buried bodies. And like I said, generally these financials, you open the closet door and there isn't a skeleton in there. There's a cemetery. So I'll stay away from them. There are much better stocks that have much better stories than Wells Fargo. So I don't know if you're trying to buy it or sell it or be short it. But generally, you get that huge volume day like yesterday, and that means that you've got an exhaustion move. Generally, they don't move that much after an exhaustion move. You're either going to get consolidation or you're going to get more distribution. So not a big fan of it. Probably much better stocks in finance than Wells Fargo, and much better shorts and longs all over the market. So not a big fan of that. Let's check in once as we exit. Up 3 points on the S&P cash. Dow's up 145. NASDAQ's now down just 26. And again, options expiration tomorrow. Expect the unexpected. My guess is the unexpected will be kind of a nice big run up to 28.75-ish. I'll look at the options tonight. I mean, I'm sure that they sold a ton of puts, and that is counterintuitive. That means the market just kind of goes higher. So I'll look at that. We'll talk about it tomorrow. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.